In today's video, we'd like to look at the moderation that we're seeing in US economic growth and the impact that that's had on asset markets. Recent economic data that we've had out of the US has indicated that we're starting to see a moderation in growth, and that's come from the likes of the ISM data, which we covered in yesterday's video, and things like the Atlanta Fed nowcast, which looks to approximate where GDP growth should be. And we've seen that weaken from about 4% down to its current level at about 1.8%. So we're seeing that moderation, and we've also seen it in yesterday's data that we saw from the JOLTS. The JOLTS looks at the number of job opening opportunities that there are within the US economy, and we've seen that moderate from about 8.4 million down to 8 million. So that theme that we've seen in terms of moderation in US growth also coming through in the labour market. Now, on this Friday, we'll get the NFP, or the non-farm payroll data in the US, which looks at the number of jobs that have been added to the US economy over the month, and that's expected to be positive 190,000. So we'll see how that data is reflected through on Friday, but we want to also touch on how this has influenced asset markets and how has that influenced pricing of different instruments. Well, if we start with US sovereign bonds, we saw 10-year US Treasury yields moderate from their high, or their recent high on the 29th of May, down by about 20 basis points now that we've seen that moderation in growth, on the expectation that it will fuel more positive sentiment from the Federal Reserve in terms of interest rate cuts. But if we also look at how equity markets have responded to the data, equities have actually held in. So at a headline level, equities are still doing good. But if we actually look underneath the bonnet and actually look at individual types of equities, we've actually seen that cyclical equities, or those that are more exposed to economic growth outcomes, have underperformed the rest of the market as we've seen that growth moderate. What we also think is worthwhile touching upon is that although we are seeing US growth moderate, we're starting to see green shoots in other regions. So this morning's data coming from China and also Europe indicates that the services sector for both of those economies is improving. So although we are seeing a moderation from the supreme strength that we've seen within the US economy, we're seeing this being picked up by other regions such as Europe and also China. So thank you for watching today's video, and we'll catch you in tomorrow's episode.